Welcome back, OIG family, to another episode in Oracle's TA, where we take a deep dive into the technical analysis of fundamentally sound cryptocurrencies. Today, we're going to be looking at the Bitcoin chart. Remember, if you like the content, subscribe, hit the bell notification button, and also smash that like button to stay up to date with all the stuff coming out from OIG. Also, remember that we have a Discord community, and that's usually where we update our community on upcoming episodes such as Oracle's TA, AMAs, and you name it. And also follow us on Twitter. Well, without further ado, let's jump straight into the technical analysis. So I have here marked out this white line, the last episode of Oracle's TA. So everything from this point on is new price action. So let's take a look at where we left off. For the most part, I haven't touched the chart. So all the levels you see here should remain the same from the last episode we've had. And on the last episode, you may have remembered that we were in this triangle that we drew. Now, obviously, horizontal levels are king, and I believe that there are some probabilities to patterns, but I pay mostly attention to the horizontal levels. Nonetheless, we can see that we were in the triangle, and we did find support at the bottom of the triangle. Now, that would have been your aggressive entry, and I will be going through a couple aggressive entries that you could have seen here, but anyway, as we digress, we see that we found support at the bottom of the triangle and rocketed up. And that move here was a good 7% in less than 5 hours. And what we see here, if we zoom in, is that we did break initially the top of the triangle. We broke out. However, it became evident that it was a fake out. Could not find support, broke back down, went lower, and we started to see a small change in market structure on the lower time frames. And just to note, we are on the 15-minute time frame. So higher lows, and eventually we come back up to the top of the triangle. We see that we broke out, found support. So that's our confirmation of our breakout, and that would have been another aggressive entry. However, if we look over to the right here, we see that we did find support on the top of the triangle, which is this green line here, to the dollar. So that's a very good sign here, a sign of strength. Now, where would have been obviously I mentioned this would have been your aggressive entry. However, with confirmations of breakouts, you always want to enter upon sweeping the previous high. So this would have been your safer entry. Now, if we zoom out a little bit here, we see that we came up above that key level here that we mentioned, which also we can see there's a weekly level like we mentioned last week, a Fibonacci level, as well as I believe a fixed range point of control, which evidently became the support of that breakout, which also confirmed the breakout. We see a nice bounce off the point of control here, and a higher low, and we rock it up. So this move here, if you were to have entered at the safest point, would have got you a 9% move up. And from the aggressive entry, you would have seen a minimum of 11%. And if you do remember from last week, we did have this red box here, which indicated an excellent short entry if you were planning to short Bitcoin within this range. So we see that price action came up to that short entry, and if you had orders placed in advance, you would have seen that your orders would have been filled actually, and we would have seen a bit of a front run here because the candle didn't even close above or near the levels, the daily level. So what does that mean? That there is a bit of resistance up here, and we actually never came even close to that price range after coming back down. So we moved down and ultimately could not break out of the range and slowly made our way down. Now, if you did enter into a short here, because like we talked about, then you would have set your profits at each level on the way down. So you would have had already 2 take profits and now would be sitting in profit. But let's go through the price action. So we see a move down. We try to find support, as you can see, at this level. Could not find support. Break through, come back test that daily level, make our way down. We do find some support here on the weekly and key levels that we marked out. However, it was not enough, and we also see that we found a little bit of support here on the point of control. So we came down, bounced here, couldn't make our way up, so ultimately broke down, and from there we've kind of been a little in choppy waters, and now we've come up to the point of $19,799, so $19,800, and looks like we're kind of sitting in the middle of nowhere, but we do have some new levels. And one of those new levels is a new weekly. So every time a candle closes, we add a significant candles, that is, closes within a certain time frame, we add that to our chart. So as we are now into Tuesday, Wednesday, we have just closed a new weekly candle, and if we put that on the chart here, we see that that new weekly level was a point where we found support. So ultimately, what are we looking at here? We've found support, and we are outside of this triangle. We could pretty much take this triangle out, at least some of it, and I'll leave this trend line because it is of some significance, since we found resistance here, here, and a bit right here. So that's also turned into support, like we mentioned here. So I think there is still some significance to this line there. So considering that we found support at the new weekly level, we've also moved up above this trend line, which was our original triangle. So really the question is, what does Bitcoin do from here? Well, we have to do a little more TA and add a couple more levels just to see what the future looks like. So one thing that we could add here is our Fibonacci tool. So if we take our Fibonacci tool from our low of the range to the high, which was recently set, we start to see some bit of confluence here at the 19,300 level, similar to what we saw over here just a couple days ago or weeks ago now. So now that we see that this is somewhat of a key level, we see that there has been an interaction here, and it was positive. We saw a quick rise up of 3% within not really much, less than 10 hours. And now we're seeing the price action kind of hover in this region here. So what do we see next? Well, we have to look for support bounces, obviously. But if we do see Bitcoin rise up from here, I'd like to see us reclaim this key level here. As you can see, we haven't really established support at this level. We've come up from the bottom of the triangle like we talked about, and we didn't really use it as support. So what do we see Bitcoin doing in the near future? Well, since we've just found support at our weekly level, which in turn also is our Fibonacci golden pocket, we can see that this is a good region to set long orders, or was. Now that we've moved from that, I'd want to see some sort of slight market change on the lower time frame, which would mean higher low somewhere here, and then us starting to move up. So Bitcoin to move up would mean that we would look to the next level, which was our weekly, which we did find a little bit of an interaction here and here. Now, what I want to see is Bitcoin reclaim this level for higher. So if we do get a breakout out of this weekly level and we come back down to retest it, that would be your buy entry, your long order, and that could potentially turn into a swing. However, key thing is that we are in the middle of the range here, so anything can happen as well. We still have that point of control here, right? So this is a very key level here and one to watch. However, if we do see a bit of a market structure change, we can also note that on a higher time frame that we are experiencing a low, higher low, potentially a higher low, and if we can make it out of this range and maybe get us a fake out, we could see a higher high, and that's when we would want to look for another long opportunity outside of this range. Now, that's the bullish case. The bearish case obviously is we found resistance here. We could potentially go down, find a little bit of support, maybe come up here But that, as you can see, is still a lower high. So find more resistance and make our way down to lower levels, which we have marked out. So ultimately, the bearish and bullish case still are equally weighed out, as we are still in the range. I mean, we'd want to see a breakout out of this range to really set the tone for the market sentiment, which we will see in the coming days. So, OIG family, that wraps up our update for Oracle's TA this week. Remember, if you like the content, like, subscribe, and hit the bell notification button to stay up to date with all the stuff coming out from OIG. Until next week, we'll see you soon.